R. Chandrasekaran, Group Chief Executive Technology and Operations, Cognizant, joining us now. Chandra, thanks so much for being with us. Always a pleasure talking to you. And Cognizant once again outperforming there. But the headline that everyone's really latching on to right now is also the fact that you've actually lowered your guidance for 2012. Are you just being conservative here or realistic?
Yeah, actually, really look at it, we are quite pleased with our industry-leading performance. Our Q1 results came much above the guidelines. We grew by about 2.9% quarter on quarter. And even if I really look at the rest of the year, though we have revised it down to 20% from 23%, it is still far ahead of competition or what even NASSCOM has projected as the industry growth. So overall, we are very pleased with the growth outlook for the company. And also, if you really drill down a bit deeper, all the industry segments are growing very well for us. Even the banking and financial services segment, that's grown very well in Q1, and even rest of the year, we expect that, growth to continue, though slightly lower than the company average. All the other industry segments, healthcare, retail, manufacturing, information media, entertainment, all these segments are going very well. We see a very healthy pickup in all the service lines. So overall, we are very pleased with the outlook, growth outlook for the company. And it is just that, normally when we get into Q2, the acceleration that we were expecting, that didn't live up to our expectation, what we had originally anticipated about 3 months ago. So that's the only blip, but otherwise, we are quite pleased with the results so far and the growth outlook for the rest of the year.
All right, and I'm going to get into those Q1 numbers in a bit more detail, but essentially, so you're saying that the acceleration didn't pick up the way you thought it would. Is that due to global conditions?
It is just that, we saw some softness in the, if I look at our financial services, which includes banking as well as insurance, and the banking component in North America, it didn't take off as much as we had expected. And similarly, in the pharma portion of our healthcare segment, we saw some decline in Q1. And that's the main reason why the acceleration didn't, live up to what we had anticipated at the beginning of the year. So barring that, all the other segments are doing extremely well for us.
Okay, so let's get into those in a bit more detail. For the quarter gone by, in terms of volumes and pricing, if you could just break that down for us a little bit and tell us how they fared.
Actually, the pricing has been flat, so all the growth that you have seen is pretty much volume growth, which is pretty healthy. And even for the rest of the year, we expect pricing to be pretty stable with a slight upward bias.
Right. Now, sequentially, your Q2 guidance indicates, growth of about close to 5% in revenues. What do you feel is going to drive Q2? You did mention some specific segments, but just outline the key factors going ahead.
No, as I said, we have a fantastic customer relationship. So many of the customers are continuing to look to partnering with us to drive effectiveness and efficiency. So that's on the one hand, driving demand. And the investments that we have made all these years in consulting, infrastructure outsourcing, as well as in business process outsourcing, these are generating newer demands for our services. So that is what is actually driving the growth for Q2 and the rest of the year. And, since we are already into the middle of our Q2, we do have a good visibility of our Q2 revenue, and we are quite confident of meeting those guidelines that we have outlined in the earnings announcement.
Okay, fine. And going ahead, you expect, the BFSI segment, or particularly markets such as the U.S., to remain a little weak, as your guidance suggests, just to clarify that point?
Just the banking segment.
Banking.
And that too, some of the large engagements, the discretionary spend has come down a little bit. But if you really look at the insurance, it's growing very well. Insurance, quarter on quarter, we grew by about 6%, and that growth momentum is likely to continue for the rest of the year. It is just the banking with some of the large engagements. We see some softness in the discretionary spend. And similarly, the pharma spend, many of the pharma companies are challenged, right? Many of the drugs have, come off the patent. And so our pharma business, a lot of it is actually discretionary spend. So because of the challenges some of the pharma industry is facing, there's some softness in their demand. But barring that, Everything
Right.
else is looking pretty good.
Right, Chandra, there is this entire debate in the IT industry at the moment with regards to commanding premium pricing versus, of course, taking that hit on margins for greater volumes. Which side of that argument would you stand on?
Now, we have always, believed in actually, gaining market share, and not that we want to compromise on pricing, but we want to really reinvest and create newer capabilities. So first of all, there has to be pricing discipline in the marketplace. That's very, very important. Otherwise, we'll be just racing down to the bottom. So pricing discipline is very important. But in Cognizant, we believe in higher growth, but keeping a lower margin, but it's more in the interest of actually reinvesting more than the 19 to 20% range back in the business so that we can actually take a wider variety of services to our customers. We can invest in intimate client relationships. We can beef up our consulting process. We can beef up our domain expertise. So really bring a plethora of services that's going to give us a lot more traction, thereby we can gain market share. That has always been our strategy, and that has really helped us to maintain an industry-leading growth all along. And that continues to be our strategy going forward too.
All right. Also, if you do meet the Q2 guidance, the revenue guidance, does it mean, and I know markets are really anticipating this, does it mean you'll move into that number 2 position after TCS, beat Infy in terms of revenue going forward?
There's a lot of speculation out there, Abha, but that has not been our goal. The goals that we set within company itself is to really take care of your customers, be the number 1 in the minds of your customer, take care of your employees, and provide them challenging opportunities. And if you do these 2 things correctly, and with the reinvestment strategy that we have as part of our financial model, we believe that we'll continue to gain market share, and that's the goal. And it doesn't really matter what pecking order you are in the industry. That's not the goal that we chase.
Right. Chandra, just a final question. Give us the bigger picture here, because Cognizant until now, the fact that it's constantly managed to surprise the market, be an industry leader, as you yourself just said, has been very uplifting overall in terms of sentiment. Now, for Cognizant to come out and sort of cut its guidance, it's a little bit of a concern. Is the larger picture, though, still intact? Is this just a minor blip? Is this something, as you said, it's just that it's not, continuing to speed up at the pace we expect it to, but demand is still there, or is there a reason to worry?
No, definitely the demand is still there. We still feel there is a lot more to be done in this IT services as well as BPO industry. So there's so much of demand still out there, and we feel still pretty good about the 20% growth, though we have to revise it downwards. 20% growth by any standard is a pretty healthy growth. So we feel pretty optimistic.
All right. Chandra, thanks so much for joining us. Once again, congratulations on those numbers. Cognizant, of course, out with its numbers today. Once again, beating street estimates. Revenues up 2.9% quarter on quarter at $1.71 billion. That's all we have for you on Earnings Edge for now. Thanks for watching.